Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so I'm gonna unmute for the live audience now. All right, guys, so I am currently recording. Let's get into the news and check out what's going on with the chart. So starting off with the news, we have a pretty interesting week coming this week. We do have the China holiday, but we have a couple of pieces of information we want to keep our eye on. We have the PMI numbers coming out, again, forward looking for inflation. So we want to see these PMI numbers in manufacturing tomorrow. So prepare for that about 9:45 to 10 a.m. Eastern time, US. So we should get that pretty early in the day. And then we're going to get factory orders. Again, this is actually another data set to let us know how healthy the manufacturing side and the production side for businesses are in the US. So we're going to get another kind of forward-looking a piece of data here for potentially next month. So we're going to get a good idea of what we can expect in Q2, middle to end of Q2, performance-wise for certain sectors of the economy. Next, April 5th. So April 5th, we have a good data set coming out. We have the U.S. trade balance. We have the PMI numbers for the services. Again, forward-looking for inflation, and then we also have the PMI for the non-multi-fig numbers as well. So again, non-manufacturing. So you want to essentially keep your eye on these PMI numbers because they tend to be forward-looking, at least when compared to the CPI. Okay, so we'll keep our eyes on those. Also, crude oil inventory. So if you're an oil trader, definitely want to make sure you're keeping your eye on that. And then as we go into the end of the week, this is where we get some really important news. Obviously, the initial jobless claims is always of interest. This may not push the markets in either direction at the time, but again, will give us a forward-looking view into, are we starting to get more joblessness, or are we still slowing down in people actually losing their jobs? So we're going to get a good idea there. And this is what I really want to look at is the non-farm payrolls. I want to see if this is increasing or decreasing. If this is decreasing, I am telling you right now, there's going to be a massive surge of layoffs coming. I think it's coming no matter what, but there's a good shot you're going to get a whole new round of layoffs, especially in tech. So watch this number here. It's going to be very, very big. And obviously the unemployment rate as well. Again, not forward looking, but we're going to get an idea of where we're sitting at right now. So this week has some good news, good data sets that are coming out. They'll give us a good idea of what we can expect into the future, but nothing too dramatic, I would say, nothing too crazy. Nothing on the levels of like the FOMC or anything like that, but we do want to keep our eye on the stuff that's coming out. Now, let's head on into the charts, see what they're telling us. So starting off with the dollar, in my opinion, the dollar is building out a bullish structure. Okay, so it's not super bullish when you look out on the macro, like you have more opportunity for downside, but in the very short term here, there's a good shot that you are looking for upside coming towards the 105s to 106 and potentially even all the way back up towards like 107. So really ultimately making this higher low from this low right here and then moving towards the monthly bearish fair value gap up towards here. All right, and there's other pieces of evidence that I've seen in charts to suggest that we may see a strengthening dollar in the short term. So potentially early Q2, so this month, maybe even next month. But once we get towards this monthly bearish fair value gap, once we get towards 106, 107, then I would have my eyes start looking for a retracement down again. Most bullish case would be that it comes down towards 104 and then actually pops up again to break through this descending trend line and head higher. So that's the most bullish case for the dollar. If we want a bullish case for, risk on assets and the markets in general, you'd want it to deny here and then come back towards this ascending trend line, kind of trade on top of it, grind on top of it, and then have a continuation down, really taking out this low right here at 100.1. 100.9, I should say, and going back down towards about 99.4, 99.3. That would be the most bullish case for risk on assets. And right now, what I will say is that's most likely. I think it is more likely that we do break down further after we take out this high here. Okay, after we take out this high here, it's more likely we'll respect this descending trend line and then break down further, losing this ascending trend line. Okay. All right. Next is the Dow. So let's take a quick look at what the U.S. indexes have been doing real fast. So U.S. indexes have had a really nice overall nice week, and Friday was a pretty solid solid close to last week as well. So what we can expect now is a slowdown. So if the dollar is going to strengthen, as I'm seeing in the short term, there is a good shot that we will see, the market slow down just a bit. We are coming into this bearish fair value gap on the Dow. So we are likely going to maybe trade a little bit higher, potentially take out this high here. And then once we get towards nearing 33.8, potentially even slightly higher, going towards like 33.9, we should see a pullback again from that zone, especially if the dollar is going to start creeping up. So I am looking for a slowdown generally where we're at. So I'm not super bullish in the short term, but I am more bullish as I look further out, as I think the dollar will start to break down towards the 106s, 107s. But right now, short term, I want to see a breakdown back towards 32.5, and then potentially even lower, going towards like 31.8, 31.9, trying to hold this low here and these bullish fair value gaps here. As you can see, the wicks did that. They held these fair value gaps and also this descending trend line. So if we can do that once more, that gives me more confidence that we're building out a more bullish higher low structure from these lows down here back in 2022. Okay, so that's what we want to see if we do break down back towards these levels, for generally these lows right here to hold. So if we do hold, let's say we break down again and we get towards like 32.5, 32.4, and we actually don't break under there, that's a very bullish case, a very powerful structure to lead towards more upside, probably going back towards the 35s. All right, so this is going to be a very interesting first month of Q2. But I am leaning short term towards downside. Next is the S&P, and it's going to have a fairly similar story to the Dow. It's going to be coming into a fairly important zone. As you can see, it filled out this bearish fair value gap right here, so we can actually take this right on off, and it's actually filled this one right here as well. So it's taken liquidity from those levels. But just like when I'm looking for the Dow to maybe come slightly higher in the short term, maybe tomorrow or in the futures, coming into this bearish fair value gap for the S&P, attacking these highs, that's exactly what I want to see coming into this level towards 4170, maybe even slightly higher, going back towards 4200, and then kind of rolling over on itself once more and potentially coming back down towards 4050, maybe even sub 4,000, like 3980, 3970, and then potentially all the way back towards 3900. And then we'll see, can we hold these lows here, or will we break down further, coming back down towards 3770, 3880, 3830 to 3770, and then looking to make that higher low from the 2022 lows down here. Okay, so either way, same story, short-term downside, and then mid-term over the next 2-3 months, I do want to see more upside. Next is NASDAQ. So NASDAQ, compared to the other two, is going to be more overextended just off the nature of what it has within it. It has more risk on assets, namely tech. So it's coming into this bearish fair value gap as well. So I want to see it slow down here, and it's very likely to. So as you can notice, like all the indexes, the Dow, the S&P, and now the NASDAQ, they're creeping closer towards major resistance zones, major liquidity zones. So they have slightly more upside. But once they get to there, we want to start looking for a pullback, especially after their extensions up, right? These are very strong moves up, and the dollar is now starting to show some potential relative strength. So we're getting the puzzle pieces put together that, okay, we've had a nice move up over the last week for the US indexes, and the dollar has had a nice move, but now it's making a higher low double bottom structure potentially. So that does mean that if that plays out, these structures in the US indexes may break down. Okay, so it's the natural flow of things. So we want to see get into this liquidity zone and then start rolling over back on itself. And we're looking for another breach under 13,000 for the NASDAQ, going back down towards the 12,008s, and then eventually back down towards 12.5 to all the way back down towards 12,200. Okay, so back under this green zone, or at the very bottom of the green zone at the least. Okay, we potentially may even have an extension lower if the dollar does have an extended move to the upside. So let's say hits that descending trend line we looked at, had a slight pullback, makes a very tight higher low, and then extends back up, back towards 108, and then going towards 109, 110. Then you'll look for the NASDAQ to come all the way down towards here, towards 11.5 to 11,000. Okay, so again, same story, short-term downside, then mid-term, I would look for some upside on this stuff. Next is oil. So let's take a quick look at the oil chart. So oil's had some downside over the last couple weeks, but last 2 weeks I would say nice rebound from dropping into this bullish fair value gap. So tapping into this liquidity, we see it wicked right back on up, came back towards this structure here, so back towards this triangle structure. It broke bearish and actually has traded through it so far. So we'll see if we get that continuation going into next week. In my opinion, we are likely going to break down once more, but not as severely as I'm looking for in the indexes. I do see it's coming back towards the 70s, like 70 to 71, 72, and then making a higher low from there, potentially even back down towards like 69, and then making a higher low from this level here, to then go up higher back towards the 80s. So we are likely going to see a move back towards the 80s, and potentially even taking out this fair value gap here and going all the way back towards 90 over here. Okay, so even though we broke down, I've been saying it for the past, I would say, almost like a year and a half now. Very bullish on oil, very, very bullish on oil. Have to stay bullish on oil until pretty much I'm told otherwise. So I'm told I can't be bullish on oil. But as of right now, being faced with this chart, I have to accept the reality that oil is very likely going to continue higher over the next 7 to 8 years, mainly due to the ever increasing inflation, right? And if the Fed is going to start to pivot in a way where they're going to either cease raising rates or even start to think about easing, then oil is extremely likely to go up in that scenario. And what it's doing now in this pullback is just a pullback back down towards the monthly breakout zone, which is technically around $40, but 85, 75, and $60 are the key zones. And it's pretty much reached almost all of them, slightly missing 60 so far. We'll see if we get more downside on it, but right now I'm still looking for, over the next coming years, for oil to be trading much higher than where it is, probably higher than where it was back in 2022. Okay, next is gold and silver, and gold is also showing evidence of a slowdown, and that the dollar is also, going to lead to its pullback here. Okay, so as you can see, gold has had an absolutely incredibly bullish 2023. Broke bullish from this descending trend line here, and then just kept on going. All right, kept on going until finally getting towards 2000. And as I warned, 2000 is going to be a major level, a major ceiling. Now, it doesn't mean it can't be broken. You can argue it's still early enough to where you can say this could turn into a bullish consolidation, like a bull flag structure. That's definitely possible. I don't see it right now. I don't think there's enough evidence for it. What I'm looking for is a retracement back, and the most bullish retracement would be coming back towards about 1930 to 1890 and holding here. I still don't see that, especially if the dollar is going to increase in strength. So I am looking for it to fail off here, as it has been, came into this fair value gap on the 4 hour and failed off. And I want to see a pullback all the way back down, eventually back down towards these lows down here, and then technically going even lower, going towards these fair value gaps down here, and that's still bullish. Okay, so over the next coming month or two, I do think we're going to see some major weakness in gold, barring any major inflation news, any banking news that will change the spectrum of the markets. Okay, just looking on a technical level, we want to see take the liquidity under these lows and then start tapping into liquidity under this low here, and then look for a much larger higher low structure, a very large high low structure being built over the coming weeks down here from this low over here. Okay, if that gets built, then the next time we start getting a bullish impulse, I will be calling for gold to be breaking past 2000 and breaking past its high over here, going all the way up towards the 22s, the 2500s. Okay, so I am extremely bullish on gold over the long term, but short term I am looking for some downside. Next is silver. So let's take a quick look at silver. All right, so silver, again, major extension on silver. Not as extended as gold, but it is also more bearish than gold when you look at the structure. It's coming into this consolidation, so it hasn't taken out the highs similar to how gold has, and it has a lot more fair value gaps it's dealing with. It did fill this one here, and now it's tapping into these over here. So I am looking for this to also pull back as gold pulls back, and this to eventually come all the way back down short term to the 21s, potentially even 20.6, and then this ascending trend line to break bearish and us to make our way finally back down towards the low end of this bullish fair value gap at about 19.5, and then tapping into the 18s. Okay, if we can make that higher low just like with gold over here, from this low down here in 2022, then we're looking at a much more bullish structure going back up towards the 26s and potentially even tapping into the 30s. So we've had a massive bullish move in the rare metals. I do think we will have more bullish momentum in the future, but now in the short term, technically maybe even the midterm, depending on your scale of time, we want to see a pullback coming so we can grab more liquidity to eventually go higher. Okay, now let's hop into Bitcoin real quick, see what Bitcoin's been doing, and let's see if we can get a good idea of what we should expect for crypto next week. All right, sorry guys, I've been yawning. It's been a long week for myself, so I've been yawning here and there. But overall, I'm feeling pretty good. Hopefully, you guys are feeling pretty good. So, Bitcoin. Hopefully, this stuff loads up pretty soon. But Bitcoin, as you can see, has been having just like gold, very similar to gold, very bullish 2023. I mean, since pretty much the end of 2022 all the way to now in 2023, it's been very, very bullish. Very similar structure to gold, and that's very awesome to see that Bitcoin and gold have a lot more correlation with it of late compared to like the S&P and the Nasdaq. So Bitcoin's starting to get kind of shuffled into the commodity basket more so. Hopefully that relationship gets stronger and stronger, because if you believe in Bitcoin being a store of value, you'd rather trade with gold and silver and rare commodities in general rather than speculative risk on markets like the Nasdaq or the S&P and such. Okay, so that's a good sign. But because I see gold going down, guess what? I kind of see the same thing for Bitcoin. It looks very overextended. We've clearly been battling here to try and get momentum to the upside, and if you look very closely at these candles, you can kind of see there isn't much fuel to break higher. Every time it tries, what happens? It gets denied. Okay, it gets denied every single time, and now we're starting to see some weakness today. And if we do get follow through going into the futures tonight or tomorrow, then we're going to be looking for these lows right here to get taken out at 26.6, eventually break back down towards the 25s, and potentially even lower, going towards the daily bullish fair value gap around 24s and all the way down towards 22. Now I am looking for mainly right now the 25s to the 24s. Okay, so I'm not calling for it to get down towards 22.5. It may. It's definitely within grasp. It's not that far away. But going by the levels, we want to see really 25 and then 24 getting tapped, because we want to see if we come in towards the top side here on Bitcoin, we'll be able to hold this high pivot and pretty much kind of build out a base here, and then lead to more upside. If it can do that, it will start to get a little bit more bullish. The only problem with this is if you look towards down here and then you look towards here, that this behavior really ruins the probabilities of consolidation here. Okay, it really screws it up quite a bit. This behavior is extremely unhealthy, and it usually leads to a punishment of where those lows get taken out. Now, I am looking for that to not happen right now, but the probabilities are going to increase pretty high of taking these lows out if we come into this daily bullish fair value gap and then we start to grind up like this. Okay, so if we start to do something like this, I would be prepared to see a sub 20,000 Bitcoin. Now, this is not the most probable path right now. What's more probable as of now is that we do break down further and then we slow down around the 25s to the 24s and grind sideways. Now, the mission for the bulls will be that we grind sideways for as long as possible. Okay, as long as possible. So ideally, if the dollar is going to be breaking up and gold, silver, and all these other assets going to be breaking down, we want Bitcoin to follow, but to hold a demand zone and create a demand zone. So pretty much building the demand zone on top of this pivot right here would be the most bullish structure that we could hope for that wouldn't threaten to take out this low. So we should look for, it may be boring, but we want to see a multi-month period of trading between 25, 24, 26, 24, around that zone. So then as we come into the dollar getting weaker again, we can then build off from this foundation here and then lead towards that move up to get towards the monthly bearish fair value gap, which is around the low 30s, right? So 32 and then going all the way up towards like 38. Okay, so that's what we want to see. If we don't get this, if we do not get this, if we get something, even if we don't have a grind up, this is why we're in such a dangerous spot. Even if we don't grind up, right, and we just come in like this, and then we bounce up from here, what we're risking is a topping structure to start to form. Okay, we're risking a topping structure to start to form because what will happen is you'll make a lower high, break down further, and then as we come towards these lows, you will start to build a neckline structure potentially, and then pop all the way back up and then create another shoulder over here. Okay, it may not seem like it, but just take a look at what you're seeing here and you'll see it here. Okay, so we have to be very wary of that because we don't want to see this happening here inverse. So when you're making the left shoulder, you tend to make a higher high, then a breakdown, and then boom, a head. And then when you're making a right shoulder, you make the low pivot, then you make a lower high, lower low, lower high, and then break down towards a neckline. Okay, so that's what we don't want to see. If that happens, this is probably the most bearish structure possible. So it's very important that we come into this level. If we're going to come down towards the 25s to 24s, we come in at a grinding, slow level, a slow pace that tends to grind to the downside, not to the upside. Okay, so we want to see ourselves kind of grind down into here and then slow down a bit. All right, so overall short term on Bitcoin, I am bearish. The Lemon Garden is short. So we're short a bunch of stuff. We also have some longs here and there, but not to get too specific. We're short Bitcoin, we're short Ethereum, we're short about up top here. We're slightly in the red on some things, slightly in the green on other things. So like, you know, it's pretty early on, but I am short-term bearish, just like I am short-term bearish on gold, silver, etc., and short-term bullish on the dollar. But what I'm looking for in crypto is a pullback that ultimately is a bullish pullback. So I'm not looking for, you know, new lows to be made, but I am prepared for it if it should occur. All right, everyone, that is it for the recap. Again, make sure you're ready for the news next week. It's going to be a pretty well-packed week for news. Keep your eye on the dollar. The dollar is looking like it's showing signs of strengthening. And obviously watch out for the banks. There has been a lot more news coming out. There may be other banks that may be having issues, and keep your eye on politics. Unfortunately, you know, this week is also going to be full of politics in the US, so we're going to have a lot of headwinds. No matter what side of the aisle you fall on, you're going to have headwinds that will probably start affecting the markets, unfortunately. So just make sure you're staying somewhat up to date on that stuff. And again, remember, if you have any questions, make sure to leave a comment on the video. Join the Discord if you haven't. You'll find the link to it in the description below. It's a free Discord. It's the best way to get in contact with me. And everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care.